sales prices are going up and up and up.
Let's elaborate on the loyalty program. I do want to talk about the free CRM, so I
It's
think
my
it's pretty
favorite.
cool.
The thinking of even job titles, like everything isn't kind of stagnant and the way it has always been.
What mortgage lenders look at on bank statements, prepayment penalties, why borrowers choose a mortgage. There's some really
hmm
cool stuff.
We quickly rolled from that into something that has been something we have been wanting to do for years.
The market is great. Things are going great. There's more liquidity. There's all these securitizations. When I talk to people that aren't doing non-QM, it's not necessarily the same.
Right.
Let's start here and we'll let people trickle into this month's episode of Mortgages with Millennials, presented by A&D Mortgage. You have so many offerings. I'm trying to figure out what I was supposed to say for sponsor verbiage. You got revolutionary portal for your partners. You got quick pricer. You got a loyalty program and a loan calculator, broker support. I think we're going to talk a lot about brokers today. When you think about the latest offerings from A&D Mortgage, where's your mind go? How should people think about A&D Mortgage? As I said to you before you came on, there's been a huge promotional push
hmm
here, so it's cool to see you guys keep gaining industry recognition. Where's your mind go?
Yeah, so we're working really hard at streamlining and making the experience really make the non-QM, although we do all the products, but particularly focusing on that non-QM process to make that no different than the conventional process, right? The timeline, the speed and accuracy of a transaction in the non-QM world should not be significantly different than the conventional, and historically it has been. So putting a lot of investment in systems that will elevate what we're doing in the conventional and government space, but then particularly focused on the non-QM space, which is kind of our bread and butter and where we started. So
We'll get into the non-QM space here. I should say to everybody that's here so far, thank you for joining. This is Mortgages with Millennials. I'm Robbie. There's no Kristen today. She is feeling a little under the weather. I think she had a wedding this past weekend. And my whole strategy, like I had a bachelor party a couple weekends ago, felt down afterwards. I said, just keep the substance abuse rolling, Kristen. That's how you keep feeling good in the week afterwards. None of this letdown.
just got to
Don't let
rally.
just keep rallying, rally. But anyways, no Kristen today. I think we'll have no problem feeling this time. We're going to talk about some cool broker offerings that A&D has. We mentioned non-QM. And then I want to talk about market update and what we've seen going on with the Fed. And as always, we'll focus it on what it means for the next generation.
hmm
Actually, I'm going to go off script immediately,
Oh, nice.
as I'm prone to do. You're the SVP of Business Development. You can think on your feet here. When one thinks of business development in general for a mortgage company, it can have kind of wide ranging meanings. But how do you describe your job to people? What do you do?
Yeah. So when I first got into this business, I started as an account executive. So it was always like a dinner party trying to describe what I do was always very, it was very confusing for people who don't know the mortgage business. It was always like, so you're a salesperson, but you don't actually work with borrowers. So, yeah. So to throw in another wrinkle into that is the business development role. So my primary function is managing a sales team, here in Hollywood, Florida. So we cover a lot of the West Coast of the U.S. So that's kind of my primary function. But I spend a lot of time with marketing. I spend a lot of time at, trade shows, meeting our customers, and do a lot of travel to, kind of engage with our clients and try to help, grow, grow our footprint within those clients. So it's kind of wear a lot of hats wherever I can be helpful. And that's really one of the things that kind of brought me to this company is kind of the innovation, not just in kind of products and services and platforms and that, but just the thinking of even job titles. Like everything isn't kind of stagnant and the way it has always been. And when you have people that have other qualities and other things that can utilize and help elevate the business, then we plug them into that role. And I'm no different. So I do kind of sales management. I do assist with our marketing team. I don't create any marketing, but I will help them out with videos and some content and stuff like that. Joining wonderful shows like this, and then I'll get out on the street and see customers, do shows, all that fun stuff.
Well, I'm very excited to have you on today. I remember interviewing your CEO, Max, and I said, what have you learned about managing people, or how do you best lead people? And he said, I don't manage people.
hmm
I'm not going to do the Russian accent, but I don't manage people. I let people manage themselves. And I assume that leads to some job satisfaction for you for sure there. What do you like so much about your role or work in there?
Well, the level of support from the top bottom, from the top all the way down is just different. The culture here is fantastic. It is that. I mean, that's not just speak. Max is a big believer in just empowering people and let them do what they do best. You always have to give direction and move people, especially me. I'm kind of bouncing all over the map, but sometimes I need some redirection, but he definitely empowers his staff to, go after it and, work on making the business better. And that's kind of where we kind of bounce everything off of. Are we making a positive impact in the business and the industry? We're not. If you are, then fantastic. Let's champion that. If it's not, then maybe we need to redirect and go in a different direction.
Well, as people know, this show is geared toward the younger generation.
Mm-hmm.
If you've tuned in and you're here for the wrong show, we have plenty of shows at Chrisman. We just launched a whole suite. I see a couple hosts of some other of our shows that are actually tuning in. Say, Audrey, make sure to send me your video recording this week. We need to get it on the YouTube channel. But this one is geared toward millennials, and I want to talk about some products that are geared toward millennials. Audience, if you're out there and you have questions or comments, tune in the chat. Love to hear from you, even where you're calling in from. I know Kristen likes that. Hello from Cape Cod, area of terrible cell phone reception. So I'm at a local supermarket. If you hear cars in the background, it's because I'm here on Main Street in Massachusetts. You're calling in from Florida. I'm always intrigued to hear where people are calling in from.
Salt Lake City.
Salt Lake
Nice.
City.
Yeah.
Look at that. Yes,
Right.
Ashley. And Ashley, thank you for being a consistent attendee of the show. I really appreciate seeing you in the attendee list for sure. Miami, Maryland. This is thank you, people. Thank you, making my day here.
It's your national presence. Fantastic.
National presence. Love it. So let's talk kind of the next generation of borrowers and how they're being helped, specifically what A&D is doing. I know that there are a couple of recent tech launches you've had that are aimed at brokers. And in general, let's start with how brokers are helping the next generation of borrowers, the benefits to younger borrowers of working with brokers. I assume access to a wider variety of products is one benefit, but what else comes to mind when you think of reasons that the young people would work with a broker?
Yeah, I mean, it's, the millennial generation is probably the first generation who is not accustomed to like walking into a bank and hoping the local loan officer has the best deal for them. They're used to whether it's, Kayak, Expedia, Credit Karma, they got all these different platforms where you can shop and find the best deal for what you're looking for. And that's a mortgage broker, right? Like that's the primary function is to, shop what you're looking to do and find the best deal for you that's catered to, what you're looking for. So it works out perfect. I don't think there's, I think it makes a lot of sense, the growth in the recent years in the wholesale, piece of the business, just because of that. People want options. People want to get good deals, particularly, our generation is one that is going to shop around and find out works best for them, and it's not always price. I mean, that's, I guess the one difference between maybe a mortgage broker and, some online platforms that shop different products for you is it's not just catered to one aspect of what you're looking to do, right? You may be willing to pay more for speed or service or touch, whatever it is. So, a mortgage broker can sit down with you and really figure out what's important to you and how you want to move forward, and then kind of shop that around and, find the best deal. So that's our primary customer. I mean, we do correspondent lending and some other things, but, our primary customer is mortgage broker businesses. So a lot of the products and services and things that we have built out has been catered to that sector of the industry.
Yeah, let's flip and focus on how mortgage companies can best support brokers. What have you learned in your time there at A&D about what works best for facilitating that relationship? What gets the most positive reception? How you keep that loyalty?
Well, yeah. So it starts with, again, looking at how we do business. I work for lots of, larger companies, particularly early on in my career with big banks that kind of had a platform and a system that was catered to support the way that they internally like to function. The dynamic has shifted in the wholesale business where we're more focused on, what are the customers' needs? They don't want to read through 300 pages of our guidelines. They don't want to grab a, 16-page rate sheet and figure out how to price things out. So we've developed a lot of tools, whether it's a quick scenario desk, whether it's our quick pricer, which is, award-winning technology, whether it's just the portal platform of the ease of getting a loan into the system. Things have been built out um, to make business more efficient, quicker, more intuitive, so that you don't need to spend hours and hours with your investors to learn how things function. Most systems today are very plug and play, and we're no different. We've been building our entire process and program menu around that idea.
We have a question in the chat from an
All right,
intrepid
cool.
young mortgage media mogul named Rob Chrisman. I think I got that right.
I feel like I've heard of that person.
He says, when I think of a typical AE, or account executive, I think of
Mm-hmm.
someone aged 45 to 65 with a few years under their belt calling on brokers.
Mm-hmm.
A&D doing anything to shift that age range down with your AEs?
Yeah, we are 100%. I mean, we need good, experienced people on the ground, working on relationships, all of that. I don't think that dynamic shifts tremendously. But, for example, my sales team is, almost everyone on my team. I have close to 30 people now on our team. And I think outside of maybe one of them, they all came in with no mortgage experience at all. Put them through an academy of learning, you know, start with learning how to spell mortgage. There's two G's in it. Yeah, yeah, it's crazy. So we go through the whole process of how everything works, how it functions, how to read rate sheets. Hopefully they don't ever have to do that. But yeah, 100%. Doing the whole little grid, the whole thing. So we go through weeks of training to get them acclimated to be able to speak with clients, because the reverse of that is true too, right? That the clients that they're speaking to, many of them are well seasoned and experienced in the business. So you don't want to walk into a conversation and not know what you're talking about. So we spend a tremendous amount of time, teaching them the business. And then I work to just surround them with every industry partner I can pull in. Rob, if you're by the office, I invite you in, just yak at them and talk to them about mortgages. So whether that's an MI partner, appraisal company, a credit company, whoever comes by the office, I'm like, please come speak to the guys, and try to fill them with knowledge so that they're able to go. So we spend a lot of time, hopefully, grooming the next generation of account executives and salespeople.
And on the same vein of thought, in general, how do we get more young people into the career path of being a broker?
Mhm.
I mean, I get asked this question about how do we get more young people in the industry in general, and I think the response of, oh, well, we should go to college campuses and we should recruit. I think that's kind of worn out. When it comes to actually recruiting people to be brokers, how do we get more young people into that position?
Well, I tend to find there are a lot of people, particularly now with what the job market and the economics are right now. I think there are a lot of people searching for, a combination of the freedom and, remote work, and, a place where they can, put in their effort and get rewarded for their effort. And I think there's probably not a better place than to be an independent mortgage broker and do that. And we'd love to have you for a client when you do. But, I think, putting out resources, we spend, not just for our broker clients, but we put out, blogs and lots of different information and research information out there, for people to hopefully stumble and find us. We do a lot of kind of outbound stuff. We're working on a whole academy just to help people get into this business, get acclimated to it, whether they're, processing or, loan officer or whatever section they want to get into the business. So, we're really working hard, a lot of work to do, but, really working hard to kind of give back and help, grow the next generation of mortgage professionals, whether that's, in our side of the business, or whether that's out originating, or whether that's in, other areas of the business. But, it's definitely been a focus. There has been a need, post crash to, maybe the last, few years, there's been kind of that hole of not a lot of new people getting into the business because of the damage and what they saw when they were kids and what their parents went through and all that kind of stuff. So, that I think is kind of fading away. And then on top of that, you have a lot of lenders and investors that are putting, more, dollars really into marketing and helping educate people on this business. And I really hope that leads to, growth in the originator space, and then, in turn, the wholesale space as well.
Well, as you said that, I'm kind of smiling to myself over here because I think whether it's a LO working with a borrower or it's a company trying to get a young broker in the door. Tech is great, but I want to be educated. I
Right.
want somebody that I feel like has my best interest at heart, is going to lead me down this path, and is going to make me feel like I know what's going on and I'm in control of the process, and I feel good. I think that's a much better way than selling people on technology. But that can come later on once you understand all the education
Hmm.
behind it. So that's
Well,
pretty cool
it's
to hear.
that's really the
Uh,
trick, right?
I'm
Is
excited.
to
Go ahead.
Oh, I'm sorry. Yeah. The trick is combining the education, the information that you want to get out there, and then into chunks that are digestible, right? And we spend a lot of time, talking about how are we going to get that information out? Again, we can't, throw out a, 300-page set of guidelines and expect people to digest and understand and then be interested in it. So working on, chunking things, putting things and delivering it in a format where people are going to first see it, and then be able to digest and understand and then gain enough interest to continue to want to go down that learning process. It's tricky. It's tricky. And I think our marketing and public relations team does a, fantastic job of kind of putting together, the storyline to help encourage people to get involved.
Yes. And Carl says A&D's blog has great advice and content. Ashley put the link to the blog in the chat. I clicked
Yeah.
on, look at this. What mortgage lenders look at on bank statements, prepayment penalties, why borrowers choose a mortgage. There's some really cool
Hmm.
stuff on there. So, Carl and Ashley, thank you for bringing that to our attention. It's certainly, holy smokes, 35 pages by 9. Yeah, you got it by 12. You got like 400 plus articles in there. So, cool
Well,
stuff.
and I'll give you a trick that I talk to people when I'm on the road. I always tell them, we're all looking for better SEO. We're all looking to get higher up on the Google list, but blogs is something that those search engines and stuff really want to see. So using some of that content, we spend a lot of time and effort and thought process on what topics we're going to talk about, right? We research what's going to be successful. So our clients can go and take the information that we put out and use those topics to create their own blogs and help their own platforms. So a lot of people do that and use the investment that we've put into it to help grow their own businesses. It's a great free resource out there for them.
Yeah, that's fantastic to hear. And I will plug what we're doing for a second. We just
Nice.
rolled out a brand new website, chrismancommentary.com. No excuse for misspelling our last name. It's right above both of our heads, chrismancommentary.com. We have thought leadership pieces on there geared for mortgage industry professionals rather than
Nice.
borrowers. And I'm planning on leaving the section unsponsored. I'm not going to let any company sponsor the section because I'd like it to remain this place that's just meant for education rather than people thinking there's a biased current one way or another. So once you check out andmortgage.com/blog or /articles, head over, check out the new chrismancommentary.com. My plan was to kind of break this show up into thirds. First third talking about your job and some of the stuff that is geared toward the younger generation. I do want to focus a chunk also on some of these new tech updates be rolled out, and then I'd like to get into a market update at the end. But A&D here recently, I know there's a couple of recent tech launches that have been aimed at brokers. What have those been? I guess we'll get into how it'll help the next generation of homeowners in a minute. But what are the tech launches for right now?
Ooh, yeah. So we've been very busy. Our IT department has been extremely busy. So it started with rolling out a whole new kind of facelift and structure of how our customer portal works, just based on feedback of talking to our clients, a cleaner, easier to access, all the features that they liked about the previous version, just updated in a cleaner format. And it also puts it in a platform where we can add pieces to it over time, which we've had a number of kind of updates since it initially rolled out. So that, kind of customer portal is number one with the bells and whistles that we want to have attached with that. We quickly rolled from that into something that has been something we have been wanting to do for years, which I think you talked about in the very beginning, which is our loyalty program. That has been tremendous, and we had a lot of great people work on that program and roll that out. So, being a Sky Miles guy, I appreciate the earning points and being able to use my points. So that's kind of the loyalty program, is rewarding, customers that support us, but support us in a way that helps our business, closing loans faster, efficient, educating themselves on our process and stuff, and earning those points and being able to use those for fun stuff like rushes if you need it, free extensions, admin fee waivers, stuff like that. So lots of goodies. The next one that's just around the corner, I'm very excited about. I'm a big, believer in, CRM tracking. Even though I still have over to my right, I still have an old school spreadsheet that I still reference from time to time. But having access to a free mortgage-based CRM. So A&D will be rolling that out shortly. So extremely excited about that. We call it Leader, so like to process leads, but that will be connected through all these other systems so that you'll have one, it's three systems that'll be intertwined into one platform. So extremely excited about that. It's been a tremendous amount of work for a lot of people, not me. I just get to talk about it, but a lot of people are doing a lot of hard work behind the scenes to make it all work together and for it to all be congruent. But excited to see that and excited for the investment that the company's made, again, back into the industry to make things easier for our clients, easier for me, easier, for everyone that engages with A&D.
Let's elaborate on the loyalty program. I do want to talk about the free CRM. So
It's my favorite. Yeah.
Yeah. So the loyalty program, kind of the thought behind it, how it's evolved, what the real benefits are for its user.
Yeah, so the thought behind it was a pretty easy one. Our clients, especially kind of our premier clients that submit a lot of business to us, looking at ways to reward efficiency. So that's really what it comes down to. We're not ever rewarding people just for sending us business. It's fantastic they're sending us business, but if it's inefficient business, that's not moving us forward or the industry forward. So it really comes down to, efficient loan processing. We look at things like touch count. We look at things like the speed of closing business. And again, the other piece of it is kind of educating your mind. So whether that's, being on this call, watching some of our webinars or some of the other educational opportunities that we offer, and kind of awarding that engagement with a point value, and then being able to cash in your points for perks. My favorite is we have like a little superhero t-shirt that I still have, even though I plug this thing constantly, I still have not got one from our marketing team. So I'm still waiting on that. But lots of fun things. Like I said, whether that's a rush, whether that's an admin fee waiver, appraisal fee waiver, things like that you can use your points for. So just a way to give back to our clients who, support us with efficient business, and in return, give them, nice things to help their customer experience be a little nicer.
Sounds pretty neat. So
it's fun. It has been, it's been kind of a 1.5 year long process, I think, that has been built out. So it's exciting to kind of see that vision come alive. It's something we've been wanting to do for a long time. So, and then to see it come out and then so readily be used. We have a lot of clients that are using their points. So kind of the, people, engaging with it has been a very big positive. So it's exciting to see.
Good to hear. Well, let's get into the free CRM. Is this not something most companies offer? Their brokers is like a revolutionary thing. You'd think it would be second nature.
You would think. We have seen some kind of narrowed down versions of CRMs that some lenders have rolled out. This is a true robust CRM for lead processing, connecting to marketing, connected to kind of your loan processing. So we have many clients that have their own platforms that they're very happy with. I always tell people, if you're using a CRM and you're happy with what you're doing, fantastic. Take a look at this. This might be a better option, or maybe you just have a system that you don't engage with because it doesn't work for your business. This was kind of built from the ground up. We have used this same platform internally. This is what I use on a daily basis. Obviously, recatered for a retail experience versus how we would engage with it internally. But giving you everything that you need in one platform. As I mentioned, it will connect with your loyalty program. It will connect with your portal so that you can move things along more seamlessly. Start applications through there, track your referral sources. You can do marketing campaigns and things like that. So, again, it's a big plan and a big process and a lot of building and heavy lifting that's got to get done. But something that we're very excited to be able to offer to our clients.
That's pretty special. people out there in the audience, do your companies, your relationships offer anything like this? What are you doing not working with A&D Mortgage? Oh, come on, people. Uh, so let's see here. The CR, when's that rolling out?
I hate putting dates on stuff because whatever it is, I'm always wrong, especially when it comes to IT projects. I've been told within the next quarter or so. So there's been a lot of testing. I've seen it, so it's not a vision. It's on, it's being tested. So we need to make sure that it works. We need to make sure the systems interlink and do all that they're supposed to do. But I would suspect within the next 60 days or so, barring testing and what we find through pilot phases in there. But it should be out fairly soon.
That's good to hear. So I don't want to stretch too much in asking this. When it comes to helping the next generation
hmm
borrowers out there, potential homeowners out there, how do you feel like this overall suite of offerings is helping or keeping them in mind as you roll these things out?
Yeah, so I mean, the entire platform is obviously designed for our customers, which again are primarily mortgage brokers and lenders and credit unions and people that engage and send us business. But offering a plan, little things in there. The application link where you send your application out directly to the borrower in your name. They can start the application process. That's obviously very popular. A lot of people like to use those links to start the application process. So doing things like that, just kind of having in mind the overall process. Again, drilling into the streamline process to make things move faster. I think speed, particularly now when rates are up and down, and I know we want to talk about that in a minute, but particularly where we are in the economy right now, having the ability to move quickly and efficiently is going to roll down to their clients and make it more streamlined, making the little things, making the docs more obvious, making sure things make sense to the client. They're not getting, random weird emails and not sure whether that's the lender or not, things like that. So just kind of cleaning up the whole appearance of the loan process. That's what we're really working on.
Good to hear it. So someone in the chat chimed in, Roy George, he said A&D is our non-QM go-to. And
All
I
right.
think that it would benefit viewers of the show to talk a little bit about, but for us to talk about non-QM today. Uh, let's start with kind of an overview of what's been going on recently. I get the sense, whenever I talk to anybody that works at a non-QM lender, it's the market is great, things are going great, there's more liquidity, there's all these securitizations. When I talk to people that aren't doing non-QM, it's not necessarily the same
All right.
story. So I'm not going to ask you to set the record straight necessarily, but how do you view what the non-QM market has been like recently in terms of liquidity, demand, product options, so on and so forth?
Yeah, well, first and foremost, to that customer, we'd love to be your number one conventional and government lender as well. So we do all those products, right? So we're not just non-QM. That's obviously where we started, what we're known for. But we like to think that we offer a variety of products across the spectrum. From a growth perspective, percentage growth, yeah, there's been a lot more growth in the non-QM space. You can't go to an event or a trade show or something like that and not see, non-QM lenders all over the place. We like to think that what we do is special. We do our own securities, we do our own, servicing and those kind of things. So, we're not really beholden other to investors. We're not really beholden to anyone there. But so we definitely like that. I mean, I like being in that space because it caters, again, going back to the topic at hand, millennials. It goes really caters to what we're seeing from kind of an employment standpoint. People working multiple jobs, people working gig jobs, different aspects. So it really helps kind of break through kind of an old school traditional guidelines standard and hopefully we'll modernize the lending experience and we hope over time that a lot of those attributes will flush into the GSE loans as well. From a business perspective, yeah, things have been solid for us. Again, we are a leader in the non-QM space, so that is a space we're very comfortable with. Are there challenges? Obviously, we're always looking at where there are issues, whether that's evaluations, whether that's defaults, whether that is warning signs with certain doc types and those kind of things. So, kind of Old school, or where we first started in the non-QM space, was you could put out a rate sheet, and that rate sheet was good for 6 months. Your guidelines might be good for 2 years. That has definitely changed. We are much more like the conventional space in that aspect. We do have rate changes uh, more frequently, maybe not as frequently as conventional. We definitely have guidelines changes as we adjust for the market and what we're seeing out there. A lot of lenders will kind of follow our lead and see what we're doing because they know the strength of our securities, and they'll kind of see where we're tweaking guidelines and follow suit. So it's kind of nice to see that. But overall, it's been a great space. We have not seen kind of the market back off to this point. There is a lot of competition. We continue to grow. So I think overall that piece of the industry is still kind of in a growth mode. At some point, it should stabilize and find a kind of a happy medium of what piece of that pie belongs to the non-QM space versus, Fannie, Freddie, government lending. But I don't think we're quite there yet. I think we still have a lot of room for growth.
What have we seen in terms of the product box expansion? Has it changed much in the last year? Are we now, is the non-QM space now able to incorporate a much larger subset of potential borrowers out there?
Yeah, I think back. I was with a company when non-QM products first started rolling out, right? And the first offering was just like personal bank statements, 70 or something LTV or under, and that was the offering. That was non-QM. It's amazing how much growth we've had in that space, starting with just alternative documentation types for self-employed borrowers, then looking at, other employed uh, uh, employed borrowers and ways to access income for them and ways to qualify borrowers like that. Then we roll into kind of these DSCR products, these investor loans, and the growth in that. I mean, even switching from standard DSCR to starting to look at short-term rental options, mixed use, condotels. So there's been a lot of innovation in that space. You don't always see that in the GSEs. Are much slower to kind of move into different products and different ideas. Second mortgages, all those kind of things. So there's been a ton of innovation over the last probably year or so. It's been a lot of kind of monitoring the portfolio, seeing how things are performing and adjusting based on that. So like anything else, you innovate, you introduce a new product, and you monitor, see the performance of that product, and you make adjustments over time. And we're always going through that process.
Which it sounds like you're doing a good job at, considering you're such a leader in the space. But yeah, what specifically at A&D do you feel like is specific to the company that allows you to stay at the forefront of non-QM?
I mean, I think it's probably our closeness to the market, right? So, we have a fantastic, can't speak, capital markets team that is consistently monitoring the markets, speaking directly to, the firms that, securitize our business and see where the performance is, see where the issues are. We're very on top of our business. You have to be when, you're owning it all. You have to be really on top of it. So I think we do a really good job of kind of monitoring, seeing what's happening. And again, a lot of times we're kind of ahead of the curve on where the changes on the plus or the minus side, where things are going. We've been, people like to say very lucky, but I think we've been very smart with how we have deployed new products or how we have adjusted existing products based on the needs of the market or the performance in the market. I think that sets us apart. We are aggressive, but with kind of a reporting mindset and see, performance mindset with how we kind of go about our business. And that has not always been the case for me or my experience with other firms that I've worked for.
And finally, for my close in my line of non-QM deposition here, how do you expect the space to evolve going forward? What do you see happening as we move into 2025?
I mean, as it continues to grow, right? So you continue to, I think that the piece that we're missing, or the big piece that we're missing, is kind of a universal product or a universal thing. Maybe an AUS engine can help kind of tie all that together, where we have a kind of a universal set of guidelines that you could have your own niches and your own portfolio products based on that, but kind of putting that all together, I think would be really nice. I think we're on the verge of something really special here at A&D for that. Um, you know, I think the nice thing about being in this space is the innovation. We're always looking where there is opportunity for credit qualified and borrowers that are able to want to get into a product and have the ability to pay the mortgage or whatever, but have an inability because of some guideline, whether that's income restrictions or whether that's in credit event restrictions. So I think you'll always see non-QM kind of innovating around, where strong, good borrowers are, that aren't able to access credit. So I love that piece of it. There's a lot of investigation work to look at, where are the holes, where are people that need help and assistance, and where can we plug into that?
We had a question in the chat from Ashley. She wants to know who the AE contact is for Utah because
Oh, yeah, you can reach out to me. I assume we have my contact information somewhere, or just michael.pearson@admortgage.com. I can definitely track that down for you.
Yeah, let me put this in the chat for the people. And I'm going to do kind of a poll question here for the audience. I'm intrigued as to what you think. We're going to shift into the market segment.
Oh boy. Okay, here we go.
For those of you watching, Michael, you're going to get a second after my long meeting. For those of you watching, do we expect rates at the turn of the year, January 2025, to be higher, lower, or the same as right now? I'm intrigued as to hear your thoughts. People chime in the chat. If you want to add a little color as to why you think will be one way or another, let me know. Michael, I know I said no crystal balls, but then I said, where's non-QM going to go? So where are rates going?
Here we go.
You're the expert. So yeah, give us some color here.
Yeah, so my best guess is we will see short-term lowering of rates. I think we historically kind of see a little bit of a rise after an election, so we might see a little rise by January, February timeframe, but then maybe lowering back down to kind of a new plateau. I'm optimistic that we will see some rate decreases through the end of this year. Yeah, I like the slightly lower. That's a good way to hedge. I like the slightly lower comment. So that's probably where I lean. I mean, just seeing kind of what happens post-election, I would assume there's a little bump in January as a new administration comes in, but maybe lowering back down around spring time frame. But don't hold me to that. Oh no, we're recording this, aren't we? Yeah, that's no good.
Well, I was gonna say people should keep in mind that regardless of who wins in November, there's going to be a new administration.
100%.
Kamala administration is not necessarily the same as the Biden administration. We don't know if she might install a new director at the CFPB. We don't know what her housing priorities are. She did come out and say a $25,000 housing credit, which, in my opinion, would just jack up all these starter home prices by 25 grand. But regardless, and I won't back away from offering a prediction. I'll do it in a second here. Nice. Regardless, I like that there's optimism amongst those in the mortgage industry. Hey, the worst days are behind us. We're on to better things. Borrower psychology has come up to where people are okay with rates that might be just above 6% or 6.5%, which is all great news. I like what Roy said. The same feels pretty good to me, and I'll give you a couple reasons why. In theory, all the Fed movement that's going to happen, all the future expectations of which way inflation is going to go, what employment's going to do, those are baked into rates currently already. And so what would change that? You'd see, does the monkeypox spread to other countries? Does the conflict in the Middle East proliferate? These are that could really lower rates, which is odd to almost root for these things if you work in mortgage where you're like, do I want another pandemic so I can have a nice little refi wave? I don't know. But in terms of the Fed and their actions, what we could see in November from the election, the Fed has about 100 basis points of easing already baked in through the end of the year. And I am actually in the camp that says I don't think the Fed needs to drastically reduce rates. Inflation isn't quite back to its 2% target. It's kind of sticking in the mid twos. The employment picture while softening, and now it seems like the Bureau of Labor Statistics monthly payrolls report can't be trusted anymore. But it's not like employment is tanking. It's just less
Right.
jobs out of it. It's not like we're contracting. The economy's not contracting. So I'm in the camp that says I don't think the Fed needs to drastically lower rates, needs to juice the economy, needs to make it easier. Uh, I think rates staying the same, you'll start seeing more and more borrowers warm up to it for those that already have it. So I think it's I would not bank on lower rates and you're going to get a refi wave. Now, we're hopefully optimistic for that. The chat is going crazy on what I said. What do we have here? Mortgage rates decrease leading up 8 of the last 11 presidential elections.
Mhm.
Interesting. It's almost this hope springs eternal. And actually, I've
Mhm.
read that stat before, and the skilled economic commentator that had written that I was reading from said something along the lines of, yeah, in the lead up to the election, there's all this hope and rates drop and rates drop. And then regardless of who wins after the election, rates tick back up.
Mhm.
So maybe the advice there is if you're trying to time the market a little bit, right around the election is a good time to try and lock in some borrowers. Because like I said, regardless of who wins, we normally see rates tick back up into January. Tanya Bates says, great blog on the housing market during an election year. Sacramento appraisal blog. What a fake news website is that? No. Tanya, I will check it out after the show for sure.
I think the bottom line is, we need to talk to our borrowers. I mean, the supply issue hasn't significantly improved, right? So housing prices are maybe in some areas are starting to flounder a little bit, but I mean, if a borrower can qualify and get into a house, I mean, they need to start building wealth. So, when it comes to the purchase side of the market, we already seen people kind of sitting on the fence waiting for rates to go down, and meanwhile, sales prices are going up and up and up. So definitely working them when they can afford and they can pay a mortgage, working them into that. It's I just don't like people sitting on the fence waiting for things, like you said, hoping that things are going to change. If you can get into it, get into it.
Well, I hate to keep being Debbie Downer here. I'm going to try and give a silver lining. The latest housing starts and building permit reports keep ticking down.
Mm-hmm.
Builders know that we have this imbalance of supply and demand, and yet there's not enough incentive through costs or whatever programs are out there. So if that's not going to happen, at least imminently, these things like non-QM are a great way to get more borrowers into the homes that are out there. And that's the silver lining that I will give. Ashley says, discuss with clients and know their strike rate, not now when rates come down. Very good point. Michael, I'm going to wrap it up here. I do want to thank A&D after I'll give you a final word, but thank you for joining us. This was fantastic. Any other parting tidbits of wisdom or plugs or whatever you want? The floor is yours.
No, yeah. I mean, first of all, just really grateful to be on the show with you. It's fantastic. I love the little backdrop that they made for us. That's very creative. Please connect with us. There is a ton of free resources. For anybody that's not currently doing business with you, we would love to partner together. So please reach out to us. I think we put my contact information on the chat. You can always connect with us on just admortgage.com as well. But yeah, we would love to have that discussion. We're always looking for ways to partner, innovate, and do special things for our clients. So, however we connect, we would love to do that.
Before I thank you again, I'm going to say a big thank you to everyone that attended today and those that joined in the chat. I very much enjoyed the back and forth interaction. This is helpful. You guys gave me some fantastic links. Thank you for being viewers of the show. I really appreciate it. I know Kristen does too, and hopefully she feels better soon. For those of you out there still, it wasn't like she got messed up. She is the flu. She's sick. She's not a big partier. I don't think she even drinks. So apologies if that was not clear.
You did kind of call her out a little bit, but
I just said if I feel bad after a wedding or I'm down, I keep the party going. That was me. That wasn't her. Come on. You guys are so hard on me. Big thank you to A&D Mortgage for sponsoring us. I see y'all's name everywhere. I love the advertising push that you've done. And Michael, big thank you to you for joining. This was fantastic.
Anytime. It was fantastic. I really, really appreciate it, Robbie.
Looking forward to talking to you soon, and we will see everybody in September. We'll see y'all.
Bye.